The documents which were shared with investors this summer reveal an aggressive growth strategy that hints on massive upfront investment into computing infrastructure, chips, and data center spending that CEO Sam Altman has described as necessary to meet what he sees as insatiable demands for AI capabilities. Now, one of the interesting things about this that's just come out in the last couple of days is Gemini 3, which is kicking the trash out of all the other competitors out there, particularly ChatGPT, did it all with TPUs, not GPUs. It's a big difference here. And Google's built all of those in-house at a fraction of the cost, minus the 75% markup that NVIDIA is charging, right? So the company anticipates spending of roughly $22 billion this year against $13 billion in sale. Now, I think this is actually low, and they're actually finding that this number is low, resulting in a net $9 billion loss, meaning OpenAI spends approximately $1.69 for every dollar of revenue it generates. So, like, that's a terrible business model, guys. Like, it doesn't take a long time to figure that out. The number underscores the stark divergence between the two most valuable AI startups. Well, both companies currently burn cash, and they're talking about OpenAI versus Anthropic, right? While both companies currently burn cash similar rate relative revenue, their paths split dramatically. Anthropic's forecast drops its cash burning to roughly 1/3 of revenue in 2026 and down to 9% in 2027. So Anthropic's saying they're going to start spending less, whereas OpenAI says we're going to keep spending, right? So OpenAI's plan relies on what amounts to bet on dominance, right? That's their thing, is they're betting on dominance. But the problem here is they're already getting their butt kicked. Now, let's take a look at some of these other ones. Now, Chris back here says, haven't stopped thinking about this since I first saw it. And he says electricity generation in China, right? And you see this, and then you see the US barely ticking up, right? We're barely coming up here. China is on track for a crazy amount. This is an existing chart, like it's on. And somebody says, well, China's 4 times bigger than the US, so it's simply under electrified. This guy says, okay, here's another way to look at it. This is per capita, right? So US is the blue, and we're actually going down per capita while China is scaling up quick per capita, right? Now, that's another big one. Now, this is a true banger. SoftBank is selling NVIDIA stake to fund companies whose main expense is buying from NVIDIA. Right? Like, some of those things don't make sense here. And this is what, this is what is the comments are even going after too, right? In order to generate a 10% on return on AI investment, it would require $180 per month of every Netflix subscriber. So what this means is JP Morgan did a report. I'm going to tell more about this, but these are the highlights of it, right? JP Morgan did a report to say what it would take for OpenAI to become to cash flow positive. In order to generate even a 10% return on AI investment, it would require a $180 subscription from every Netflix subscriber. So basically, if you like this clip, make sure you check out the full Startup Hack Live video here, because we've got lots more for you today.